Okay, traders, based on what we have here, as you can see, we have the SMC concept. It's a kind of handbook which I posted on our social media last week, and somebody requested for the materials. It's a very good materials, was prepared about a couple of years ago, and it breaks down on how you approach the markets with respect to SMC. It's a kind of summary. It was about, I think, about 41 pages. So I want us to have it in a kind of series whereby we follow it one after the other on how we can start from what is all market structure to the level of entries. So I want you guys to follow me on series, which I'll be posting every day for you to follow up on this particular concept. Like what we have today, this is just the front page of the material talking about Traders Handbook, which is designed by me for the community. And if you can see from this particular page here, we are looking at a kind of table of content of things we'll be talking about. We have the we have the market structure, break of structures, imbalance, Fibonacci retracement, and the rest like that. Those are the things we'll be talking in details of how you can approach it one after the other. On the other hand, here we have the management. Talking about management is about how you manage yourself as a trader. You can see here we have that is the psychology. How do you think or how do you feel? How do you react to your profits? How do you react to your losses as a trader? And this other hand there talks about risk management, and also money management. So I think these are the basic things you have to write down as a trader, whereby you follow those rules based on what you want the markets to give to you. And the other page we are talking about sections here. We are talking about Asian section, the London section, and also the New York sections. Looking at it, I think for me, the best time to trade is the time between London section and New York when the two sections overlap. Because what we get to understand that there's a lot of liquidity in the market during these particular sections. And for me, looking at the days to trade, me I don't trade on Monday. I don't trade on Monday. It's not my style. I think I spend more time trading in other days instead of Monday. I always like the Monday candle to form before I do anything. So Monday is not my style. So let it be written in your rules. If you trade on Monday or with the time you also trade. So I like to do Tuesdays, Wednesdays, Thursdays, and Fridays. Or even on Fridays, what I do is just London sections on Fridays. Why the study backtesting days is Saturday and that of Sunday. Why? Is because those are the time the market is not really active. So what you do as a trader is you take your time to study, you take your time to also do your backs. That's why I call it backtesting days, so that you can take some time to reflect on what you've done during the week. Then we have maximum trading days daily. Well, talking about the maximum trades taken daily, I don't really do that because I have days that I don't even place a trade. So I think I approach that based on what the market is presenting to me, based on what the market is showing me. So once I'm seeing my hedge, then I'm trading. Then maximum trades per week. Yes, for the sake of maximum trade per week, I think I've learned to also control myself. You don't really need to trade every day. Yes, so it's still related to the maximum trades per day as well. And we have a maximum risk percentage. Yes, I think what I do most time is just 1%, 1% per trade. Maximum weekly drawdown. Most time once I pick my first three trades of two, three trades and I'm seeing negative, I run away from the market for the week. Yes, I've been doing that for a couple of years now. Then weekly percentage profit target. I don't really have a weekly percentage profit target just because I'm a swing trader. So I hold trade over days and weeks, and because of that, I don't really have that. So depending on the kind of trader you are, so that would depend on what you'll be doing in respect to this management area. And let's go to this level, which talks about observe. We see risk management, money management, and also trade management. For in respect to this, you have the market is about a rule-based system. So you should have some rules that guides you as a trader. The first thing I have here is identify your higher time frame trend. The truth is, the trend will always be your friend. So as a trader, once you can move with the trend, it makes things very easy for you. That's why you must identify your higher time frame trends. Now the other one talks about mark key levels on higher time frame. That means if you are looking at your maybe your OBs, right, or your major support or resistance area, depending on the kind of trader you are, you should try to mark it on the higher time frame because we all believe that that's where the big boys are sitting to make the major moves in the market. Then identify most recent impulse moves. Yes, this is a breakdown of how you can approach the market gradually. So you identify most recent impulse movement. By the time we go into this material, you get to understand what is impulse movement. Then pick your other block that has broken structures and imbalance, which is part of the things we'll also be discussing in this particular materials. Draw up your conferences. Yes, I always tell my community member that you should be able to see market from three different dimensions. Those are the conferences we are talking about. Now, change of character, that's your entry condition. Refine entry on lower time frame for a better risk reward ratio. That is what this RRR simply mean. And trust your setup. You have to trust what you are doing in the market. You have to trust yourself. Because some people even place a trade, they are scared to trade. It's not because they are just being scared. So you should be able, once you run your back testing and you have your data, you should be able to trust your setup. Here I stated that always trade along with the trend. Always trade along with the trend. Always make sure conferences line up in favor of your buyers. So if your buyers is a bullish market, make sure those your conferences also line up in respect to a buy movement. Here we have some, though it's part of the rules. Set. These are the questions you ask yourself when you are trying to trade or when you're trying to place a trade. Now, does the setup meet all my entries criteria? Boom. You have to ask yourself, this conference, is it aligning with what I want to do? Is the trade within my trading plan? Yes. What's your trading plan? If you don't have a trading plan, you will not even know how to ask yourself this particular question. Is the trade in direction of the trend? That one is very important. You must learn to follow the trend in the market. Is there any major news ahead? I lost a particular prof firm in respect to this, and I checked my calendar that particular morning, but I don't know, one way or the other, I even forgot that I have a pending order. I even have a running trade on it, and I just, because being a news day, I left the market. I was not ready to trade that day. It was after the news has played that was when I got to remember that I have a pending order, and I lost that particular profit my account. So these are lessons you learn by the time you start trading. Is the risk reward of the setup acceptable? Does it worth it? What's your risk reward? That will determine if it's acceptable. Am I fine emotionally to make a trade decision? This particular point here is so important that you you must learn to reflect. You must learn to know how you feel when you are taking a trade. There are some trades you will take and you will feel you have this peace. But by the time we go through this material, you get to understand that very more. I'm ready to accept a losing trade. Now, in respect to I'm ready to accept a losing trade, we all say that forex traders are risk takers. And I always say that not all forex traders are risk takers. Risk takers are the set of people who have accepted the risk before taking it. So if you don't accept the risk, that is when you place a trade and you'll be running after your MT4, your MT5. But if you accept it, you allow it to run. Yeah, you allow it to run. So if all is yes, then take your trade. Well, that's what we have on the paperwork here. But we all know that not always all these things will be yes. And that is where experience is your best teacher. In the look of this particular material, we'll be able to learn all these basic things as time goes.